Hello, chart watchers and Decision Point faithful. Welcome to this Monday, November 30th, 2020 Decision Point show. I'm Erin Swenlin, and I'm here with my father, Carl Swenlin. It's our job to give you the information that you need to prepare for the week ahead in the market. And we have lots to cover today. But before I get started with the agenda, I will say happy Thanksgiving to my father. A little bit late. How is everything up there?
Same to you. Everything's fine.
Yes, for those of you who know that we live close together, under COVID protocols, I guess you could say, we opted to not dine together this Thanksgiving, but we both missed each other quite a bit, I know. So what we're going to talk about, first of all, a lot of volume today coming in on the market. And so we're going to talk about whether this was a climactic reading, what it might be telling us. Additionally, it is the last day of the month, so we need to look at some of those monthly charts for my readers of the Decision Point Alert and the weekly wrap. Carl and I wrote about the monthly charts in Friday's article, so you'll want to check that out if you haven't, DecisionPoint.com subscribers. And for those watching the show, like I said, we will look at those monthly charts. I don't see any new signal changes except for one, and that is on gold. So we will talk a little bit more about gold. Finally, I'm going to talk about sentiment. I've gotten a lot of emails lately. I'd written an article about the RIDEX ratio and how completely overbought it was. So I wanted to take a relook at the sentiment charts, but so far what I'm seeing is we are very extended on sentiment. And normally when everybody's feeling very bullish, that is generally the time for you to see that bearish reversal. So it's a good idea to keep an eye on these sentiment charts. We don't look at them every day, but I think they're getting a lot more interesting right now. I'm going to focus in on the consumer discretionary sector today because that will be where my diamond of the week resides. So I'll go over that. I think this one looks pretty good going into the week, and we'll talk about that a little bit more at the end of the program. All right, before I finish, today is Monday. It happens to be Cyber Monday. And, normally on Cyber Monday, the sale will end at Monday at midnight. But since many of you are watching this show and it is recorded, I want to still give you the opportunity to take advantage of our Cyber Monday sale. We're going to save 20% when you use the coupon code DPSHOW, and this is only good through Friday night, and it's only for our Decision Point show watchers. If you're watching this live, you're certainly welcome to use that coupon code. It is also live today, so you can use that as well. But
Erin, you've got another code on the bottom of that banner.
Yes, that is for those people who don't know. That one expires tonight, but I have that special code just for our DP show watchers. It will be good. So you can get that 20% off on any of our subscriptions, any and all, and just use that coupon code DP show. You'll get 20% off of all of our subscriptions. So recommend you check it out, and don't worry, even though Cyber Monday is over, for some of you that are watching the recording, you can still take advantage of our code DP show, and that will get you that 20% off through Friday. All right, enough of the sales. Let's go ahead and look at our Decision Point scoreboards. All green. We're still waiting on this particular long-term PMO sell signal on the Dow to go away. We will be looking at that chart shortly, so I'm not going to give away anything there, but that would be the only, black spot, if you will, red spot on the Decision Point scoreboards for the major indexes. For the sectors, also looking very good. We still do have that sell signal on the long-term trend model for XLE. It's still on what people are familiar with, a death cross. So the 50-day EMA is below the 200-day EMA. And that is why you have a sell signal. Now, we all know energy was beat down very, I mean, it's been beat down for months and months and months. It's starting to come back to life. But because it was beat down for so long, the 50-day EMA is well below the 200-day EMA. So it will take a lot of oomph to actually get rid of that red long-term trend model sell signal.
It didn't make any progress today, by the way. It was down over 5%.
Yep, that won't help. Definitely not. Okay, so let's continue on. We'll go ahead and look at some of the charts we were talking about. I am going to pull up, let's see, right here. Well, there's a Cyber Monday special, but I'm going to skip that one. I already talked a lot about that. Okay, so right now we're looking at the 5-month candlestick chart of the SPY. And here's that total volume, that pop that we saw. Typically, we don't see those big volume pops except for on options expiration days, typically. Or it could be an upside or a downside climax, depending on what is going on when you look at the chart. You and I discussed this chart a little bit beforehand. I'm going to probably bring up our short-term climactic indicators chart. But are there any observations as far as the 5-month candlestick that you'd like to make?
Yeah, well, it's close enough to a hammer. I would consider it possibly a bottom signal today, price bottom. So with the very high S&P 500 volume.
Yeah, absolutely.
Volume. So that's a positive for me. Of course, wait till they open tomorrow. But
isn't that the way it always is? I've drawn in, it looks like I need to bring that horizontal down a little bit, but I drew in an ascending triangle. You know, these are bullish patterns. I mean, you could make a case for a flagpole with a pennant on it. You know, it's tough because we are seeing the momentum starting to, slow down a little bit here. We could get that upside move out of this high volume day on the downside. And you can also see that during the day, the VIX, the reading started to increase by quite a bit. Just a reminder, we invert the VIX. So higher readings mean it's moving downward. So we did see a drop below kind of that rising trend we've seen on the VIX, but we still closed at the lowest reading for the day, it appears. So I thought it was interesting during the day to see that, but maybe this improvement, this outlook improvement, if you will, maybe, a little bit more complacency after the fear factor this morning. So it'll be interesting to see what happens, but I like that hammer formation as well.
Right. I wonder what the volume was. What was the cause of that volume? Was it people bailing out or people piling in? I would tend to go towards the negative side on that, but it's something going on to have that much volume on a day after the vacation.
Yeah, it's true. I agree. That's kind of unusual. On Monday of the holiday week, we had a lot of volume too come in to the upside, of course, on that really nice gap up that we had on Monday. So, I mean, maybe holiday trading is a thing of the past now that we all work from home, it seems like.
Yeah.
Let's see here. Okay, so the Climax chart, our climactic indicators, these are actually up to date right now. So I think that's going to give us some interesting information. We already talked about the VIX. We already talked about the high volume. So I'm going to scroll down here just a little bit. We didn't see climactic readings, though, on breadth, which is one of the things we look for when we do have these big high volume upside or downside days. And we didn't really see that today on the net advanced decline and the net advanced decline volume.
Right. And the new highs either. We didn't get any
right
of those.
So, no new lows on the flip side there, but yeah, we're not seeing the new highs anymore. So we got a little bit of a pullback, but these aren't really climactic readings. The volume is climactic. but the
So
readings themselves aren't.
would be like a washout on the downside today. You know, all the selling that was going on intraday could, you know, all the high volume could be a washout.
Yeah, let's look at the intraday really quick here. Yeah, so the big drop was in the morning, and then we spent the rest of the day recouping those losses. I actually took back almost half of the losses of the day. So, all right. So monthly charts, let's go ahead and take a look at those. I'm going to look at the scoreboard monthly charts really quickly, and then we'll look at the rest of the SPY and gold and the big four, if you will. So let's first start right off with this monthly chart for the Dow. And you can see we came very, very close to losing that long-term sell signal on the Dow. We're at 6.9 and the signal line's at 6.97. So it'll get another try next month. We may see the buy signal come in during this month, but we don't, it's not official, if you will, until we book it, you know, so it's not going to be official until the very last day of the month. And so, you know, it could have been higher during this month at one point, but it's finishing just below. So that is still in play. We also have these megaphones are broadening, a broadening top likely. I had somebody ask me a question via email regarding the implied bearishness of these particular formations. And, you know, if you want to learn about any kind of chart pattern, you really want to go and look up Thomas Bulkowski, the pattern site. .com. And so you can look up every chart pattern you can absolutely think of. And he lists these, they are topping formations, you know, trying to determine where the breakdown would be or how far it's going to go when it, you know, comes down to the bottom here. It's certainly not out of the question to get an upside breakout from these broadening tops, but it's overall, we consider it a bearish formation. And I believe you're going to see this on a couple of these. All right, so here is the NASDAQ 100. Obviously, it's been on its long-term buy signal since May, and it's continuing strong. Obviously, we're hitting that overhead resistance at the all-time highs. OEX monthly chart, very similar. That buy signal came in July, at the end of July. And finally, let's go to the SPY. Let's go to our, and there you go. All right, so you can see that we did get the buy signal earlier in the year coming out of that bear market low. And, you know, we still have that megaphone type shape right here. There's the top part of it and the lower part of that, the megaphone. It could be ready to break out through the top of it. It'll be interesting to see if that happens. I mean, the PMO is looking pretty good right now. And at this point, the big issue is going to be those all-time highs. And again, this is the last day of the month. So we'll start on a new bar starting starting tomorrow. But at this point, we're not getting the breakout. It hasn't happened yet.
You know, we track this on the scoreboard by PMO crossovers through the signal line. And frankly, that comes awfully late, especially on a monthly chart. I like to watch when they change direction. So the first signal I would be looking really hard at would be when this PMO turns down.
Right. And we almost had that happen here. It looks like just it's like at the end of last month, maybe. But it's resumed its upward. It's pointing in the right direction now. All right, and now let's go through the big four monthly charts. So we'll start with the dollar. UUP is what we follow. And you can see it's certainly on this PMO sell signal. It's not looking so great. And honestly, you know, the only area of support here, let's see, I want to get my handy dandy crosshairs so we can see. So you can see the bottom of this, and I always laugh because Martin Pring calls them Pinocchio bars, when you get these really high moves to the up or to the downside, and like Pinocchio, they probably are lying to you. So we've got these Pinocchio bars that came here, but that I think is going to be your support level, and it kind of lines up back here, you know, back with the 2007, 2010 tops. But, you know, if the dollar is going to turn around, this is the place to do it. And looking at this monthly chart, it sure doesn't look optimistic. Gold, here's the one that we had the signal change on the monthly. I think we did, right? The monthly PMO?
It is, but
Huh.
the date's right.
Yeah.
Try GLD.
GLD, that might be the deal.
But I swear I saw it on the monthly chart just
Do a
before
monthly version.
the show.
It's tipped over.
Yeah.
Yeah.
GLD is flipped. Yeah, I'm, considering the changing for the trading purpose to substitute GLD for just because that's what we trade primarily. Most of the time people aren't going out and buying physical gold.
Right. And yeah, looking at this monthly chart for gold itself, we are seeing that PMO trying to tip over right now.
Put a thumbnail chart on that.
Sure. There we go. Ah, see?
It did turn, yeah.
It did turn.
Yeah.
All right. So it's not an actual sell signal, but as Carl was talking about earlier, the monthly charts, your signals come pretty late when you wait for a crossover on the PMO or really, moving averages as well sometimes. So looking at the direction change is very important. And hint to my Diamond Report subscribers, most of my scans are looking for a PMO that's just shifted direction for at least 2 to 3 days. So I'm trying to catch those moves, those momentum moves at the beginning rather than after you get the crossovers. But sometimes it just doesn't work out that way. But wow, we lost the 43 or the 10-month, the 10-month EMA. Not a good sign seeing these tip over. I mean, we have these really high discounts on sentiment for, the physical gold trust. And typically that's a good thing for gold. Usually you're going to see an upside move out of that. So what do you think about this chart?
I think that you've got a potential double top, and maybe we're going to go back down to that 2011 low. I'd certainly be looking at hedging or getting out. I've been waiting for a chance to get into gold GLD for trading, but don't see one now. And basically it's like protecting your profits.
Right. Which
I take a monthly PMO top seriously. Obviously, you look back and you can see sometimes when they zigzag around, but I would be really on edge at this point with that PMO top.
Yeah, absolutely. Full disclosure that I do own GLD, but likely will be shedding that one. It's one of my buy and holds, but I don't want to, why should I wait it out? Even though it's a buy and hold, I want to take care of what profit I do have and open myself up to reinvest with it later. All right. Next up, the USO monthly chart, or should we look at the WTIC? I think that might be easier.
Both, but
yeah, that one's a little more clear. So this is West Texas crude, and obviously this has been pumping up the energy sector as of late. But boy, when I look in that thumbnail, look at that megaphone. We were just talking about broadening tops.
Yeah.
Yep, and there we have one that could be a problem for oil. But really, when you look at this PMO crossover, very strong move to the upside, certainly not overbought. I mean, we've seen it much further overbought, I guess near term, possibly getting overbought. Man, almost 27% to the upside this month.
Yep.
Pretty crazy.
Let's
All
look at
right.
USO monthly.
Yeah, this is the monthly. Unbelievable. I just wanted to peek at the weekly chart really quickly. So really the thing that I think is interesting with oil is it did overcome overhead resistance here, which, you know, lines up also in this previous support area. But I think that's really a great sign. And when you look at this weekly chart, you know, Mo is it did cross over, but it immediately switched back up to the upside here. And this again is a weekly view of oil. So I don't know. I don't think that it's quite run out of steam yet.
Let's look at USO monthly,
Sure.
please. There you go.
Mm-hmm.
So now it turned up. It just turned up.
I'm going to make these
that's
bars.
another good
Yeah.
good sign.
There we go. They were too thick. I couldn't see what was going on.
Yeah.
Yeah. Again, sort of the opposite of gold, isn't it?
Right.
So direction changes, as we were saying, very important. And in this case, it's an upside direction change, which is always a good sign. TLT. So now we're going to look at the 20-year bonds. We follow TLT. This is the monthly chart for TLT. And, you know, I've been watching, TLT has been really a little bit on the frustrating side. I do own it as well. Another buy and hold for me just to expose myself to the bond market. We now are seeing the PMO turning over on the monthly chart, which is not a good sign. RSI is staying positive, which I like to see, but that certainly doesn't protect you from price deciding to move lower. So this is it's one that I'm gonna certainly be considering shedding as well, just because of that direction change that we saw on that PMO.
Check the thumbnail.
Yes, let's see that. So for those of you who do stock charts, this is how you can add that side panel, which is so helpful. You know, you can really see the moves when you need to see them.
That is really trying to turn up.
It really wants to.
But I don't think it didn't.
Yeah, I mean, when you look at bonds, let's just go back one time period to the weekly chart. You know, we still have that declining momentum on an intermediate term basis. It's having trouble with this 17-week EMA. It's not able to get above it. There's just so many things in the shorter and intermediate term that bother me. Certainly, we're looking at a bit of an improvement here, but you know, we've been on a PMO buy signal for bonds since right about here, and it just really hasn't amounted to much. The PMO is still rising, which is good. I'd like to see it get above zero. And, you know, mostly the price action is what's been bothering me, is the lack of the inability to get above the 50-day EMA is something that is a problem. So I'm not really thrilled with what's going on with TLT. But until the daily chart looks a little bit more ugly, I think I'm willing to hang on to it a little longer. All right. So that covers our monthly charts. I'm going to go ahead and I can't remember, did you have some other charts to share? I think we're ready to go into
your diamonds.
All right, let's do it. Let's go to our, whoops, that's not the sector chart list I want. All right, and these are annotated by you. It's in our sector chart list that you can find on our DecisionPoint website for our members. You can get all of this particular chart list. We update, Carl updates the annotations every day. So there's lots to consider and look at. So on Friday, I wrote to my Diamonds subscribers. I do my recap. We look at all of the Diamonds and how they've done, for the week. I did have a huge winner last week. I think it was up 13% for the week, but I wish I could say all my Diamonds do that, but of course they don't. But that was a nice win. I think my loss last week was only like less than 2%. So doing pretty good, but I looked at the recap and I looked at all of the sector charts and rotation, and I really like discretionary. I think that this sector, I was really looking for an upside breakout maybe, or just a continuation on this very, it's slightly rising trend channel. But at this point, really want to see it hold this support level that it just recently broke out of. It's staying above the 20. It has stayed above the 20 for most of November. So I'm liking this particular sector. And when I look, like we always talk about under the hood, I think there's a couple of really nice things going on. Number one, our silver cross index for XLY just triggered triggered an upside breakout of its signal line. It's not necessarily a buy signal, but certainly a positive. The BPI is just about ready to cross above its signal line. You can see that the percent stocks, okay, these two are as of Friday. They have not updated yet. But you can see what I was looking at on Friday. We have a rising trend on both of these. And while these are, overbought readings, we've certainly seen it get further overbought if it's in a nice bull market rally. So I think there's support underneath the hood here for discretionary, and so this is the one I like. All right, we have just enough time for the DecisionPoint Diamond of the Week, and not to be boring, but it's Amazon. And I'll tell you a quick story behind why I have Amazon. In the free trading room this morning, Julius de Kempener of the RRG Research, he does those relative rotation graphs. I took one of my scans and I handed it over to him, and he put all of them in an RRG chart. And of all of them, we both liked Amazon the best as far as heading and how it looked. And then we pulled up the chart and we both liked the chart. The EMAs aren't telling us much. They've been braiding because we're in basically a consolidation, or in this case, it's a symmetrical triangle. The expectation of the symmetrical triangle, it can break to either way, but typically it's a continuation pattern. So you usually are going to see the breakout in this case would be to the upside. The RSI is still positive. It's been mostly neutral during this whole consolidation period right here. But now we have the PMO, it's turned up sharply, and we have the crossover buy signal. And on a pullback today, I think it's rather attractive, especially since it's staying above that 20 and 50-day EMA. So what we did is I pulled up the 5-minute candlestick chart in the trading room. We were looking at it right about here. And I said, oh my goodness, we're just about at the buy point. So there you go, right there where the PMO was rising, the RSI went positive, and that would have put you in Amazon right about here. So the next thing to watch for, it looks like that PMO is turning up. The RSI is getting positive, so you might find a buy point in the morning. That's all I have. I'm running out of time. Carl and I say thank you and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.